India, good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. First up, let's begin with markets. My colleague Suyash Maheshwari is here with us in the studio as usual. Suyash, markets opening on a flattish note this morning, in the red perhaps.
In the red. So Shweta, it is turning out to be a bit of a freaky Friday for the markets this morning. After a 1% drop in the Wall Street, Dow Jones fell to almost, saw its worst day fall in a day since March of earlier this year, and Nasdaq ended about 1.8% lower. Indian markets were set to open gap down, and so it did. Indian market now Nifty opened at about 19,250 levels, and Sensex opened below the 65,000 mark. Now this is as of 9:40 a.m. this morning. Since then, the benchmarks have recouped some of the losses, and Nifty currently at about 10 a.m. this morning sits above the 19,300 levels. Sensex has also reclaimed the 65,000 mark. Mid cap and the small cap space remains largely mixed. The mid cap index is down marginally at 0.02% at 38,780 levels, while the small cap index is up. It has been an outperformer in the last few sessions, and it is up about 0.18% at 11,940 levels.
All right, our guest Avinash Gorakshakar is also joining us at this point in time. Avinash, good morning. What explains this downfall? And as looking at all the global markets, all the global indices down by at least a percentage point. Nasdaq, Dow Jones, S&P, Nikkei, Hang Seng, all markets everywhere globally down, and India seemed to be reflecting that sentiment this morning.
Yeah, good morning to all of you. See, my sense is I think, the Indian markets are depicting what the global markets have done, last week, last night. And I think, it's a case of some sort of profit booking, which I think at higher levels is happening. I think we have seen the markets rising significantly since April. And I think the index at a broader level looks to be, now consolidating. We could see some more weakness in the index. But if you look at the broader market, especially the mid cap companies, the small cap companies, I think, the Nifty small cap index is definitely showing a good positive trajectory. And there are many companies post the Q1 numbers, which we believe that, appear to be quite attractively priced. So I think broader index, broader market is going to see a much better kind of a upside. I think you are going to see a lot of stock picking activity, taking off. So I think broader level, I think, markets could see a lot of action. I think on the index side, especially the Nifty or the Sensex, would not give you a correct picture of what the, trend in the market is portraying. So I'm not very negative on the markets. Yes, stock specifically, I think you could make a lot of money even at these levels.
All right, stocks specifically, you could make a lot of money. But, before we go to stocks, I also want to know what exactly are you focusing on this morning? Avinash, before we go to what stocks have done well, have picked up this morning, what global cues, trends will you be picking up today?
I think my guess is, now since the earnings season is over, I think the focus on the market would be on the macro numbers, especially the progress of the monsoon and some sort of data points, on the food inflation side, on the broader inflation number side. I think markets are looking forward that post September, I think, you could possibly see inflation cooling off because the monsoons have arrived a little late, but I think they have been quite significantly better than what the street expected. So I think broadly, I think global, kind of news flows, specifically from the US markets, and obviously, what kind of macro data points come in from the Indian markets are going to drive at least stock prices in the medium term. More importantly, stock specific activities and stock specific news flows are also going to drive. Like there's a lot of action in auto component shares, capital goods companies, real estate companies. I think tailwinds in these sectors are pretty solid. And I would believe that any weakness in the market across these sectors should be used as an opportunity to accumulate. We believe the second half for FY24 should be significantly better in terms of earnings growth trajectory.
All right, and since we're talking about sectors here, Suyash, what sectors are in focus this afternoon, this morning?
So, Shweta, most sectors are trading in the red, barring the Nifty Auto Index and the Nifty Media Pack. Now, if you can see, Nifty Bank continues to remain under pressure. It is down about 0.44% this morning, and it is still comfortably sitting above the 44,000 levels, which will be crucial in the short term.
Okay.
Nifty Auto has outperformed the indices, and it's up about 0.17%. FMCG and Pharma indices, which rallied so we saw some rally yesterday are under pressure too. The metal pack is down about 0.28%. Nifty Media is up about 0.31%.
All right, so Nifty Auto and Nifty Media, they're bucking the trend, but a sea of red we are seeing, Avinash, as far as, all sectors is concerned.
I think the broad-based selling is largely because of higher levels of profit booking at these levels. I think the market is now looking for fresh triggers. Earnings season is over. I think the market should obviously look at some new trigger, at least in the very near term, to ensure that there is some sort of buying. In fact, yesterday an interesting data which I saw was that the domestic institutions bought a very large quantity, in the cash market. But on the other hand, FIs were not very heavy buyers. So I think a lot of SIP money has been coming in the markets gradually at even these kind of valuations. So I think as long as domestic money, the SIP kind of flow continues in the markets, I would not be very negative on the markets. This kind of broad selling may be there for a couple of days, but I think coming next week, I think things should again settle down, because at lower levels, a lot of companies offer good valuation comfort. So I think in the mid cap, small cap, you're going to see a lot of action. Yes, broader market, especially the large caps from the Sensex and the Nifty, look to be fairly valued at this point of time, and therefore we could not see a very large kind of incremental upside in these large cap stocks, at least in the near term.
Avinash, yes. Nifty Bank has been one of the underperformers in the past 1 month. I think Nifty Bank is down about 4%, whereas Nifty is down marginally at about 1%. What explains this underperformance?
I think markets have been quite skeptical, because the credit growth in the system has been in double digits for a long time. I think most market participants expect that going forward the credit growth is going to come down, and that is obviously going to have an impact on the credit disbursements of most of the banks. Specifically, if you look at the PSU bank index, I think last week was a fairly good kind of week for the PSU banks. But before that, I think, and a little before that, I think you see that most of the public sector banks, despite good quarter 1 numbers, very strong management commentaries, very strong kind of profit performances, were still down. So my sense is, now the market should look at the, July to September quarter. Hopefully, if the credit growth remains in double digits, then I think that would give a little more confidence, because corporate capex has been picking up, retail demand is growing. So I think definitely banks are going to play a pivotal role. I think the larger banks like SBI, Bank of Baroda, Canara Bank, even the larger private sector banks like IndusInd, Axis Bank, ICICI Bank, I think these are all good bets in the current scenario, because these are banks where we believe the balance sheet increase is going to be quite significant, and asset quality is now well under control.
All right, and since Avinash, you pointed out at a lot of factors that could be triggering, either a sell-off or a buy in the market. One of them would, of course, be inflation. Inflation has also been flagged by RBI's minutes of the meeting that came out yesterday. Headline inflation likely to remain, and this is, of course, the MPC overall view of MPC, that headline inflation will, of course, remain high. There will be a spike in the month of September as well. In direct contradiction, for that matter, from what RBI governor has been saying. He's been saying, and in fact we did quote him yesterday, saying that inflation, and specifically vegetable and pulses inflation, will come down in the month of September. But as far as inflation is concerned, the overall view there seems to be a dampener, gloomy view of how inflation could affect markets.
I think, headline inflation is going to remain elevated for some more time. It's not going to get, subsidized in a very significant way in a very short period. So I think probably, the month of September also we could see a little more kind of inch up on the inflation number side. But post September, I think the second half is something which we look forward to, and I would personally feel that sectors like FMCG, sectors which are largely rural oriented, I think would definitely benefit. In fact, in the first quarter we have seen moderation in volume growth for most of the FMCG companies, largely because of the inflation factor. So I think this is definitely going to be a key monitorable. You're right in saying that in the very near term the markets are concerned, but I think the markets are looking forward that with a good monsoon, hopefully, I think food inflation would come down, and I think that would obviously, bring down inflation, which is as per, RBI's comfort. So it's going to be a better second half according to me.
All right, I'm wondering how much monsoon is good monsoon, because at this point in time, it looks like too much monsoon, too much rainfall, perhaps also affecting supply chains. We're seeing visuals of, houses falling like a pack of cards, like dominoes, coming in from Himachal Pradesh. So obviously a supply side disruption is expected in the month of September. Hopefully it gets better, but globally as well, markets are going to wait up for important cues.
Because Jerome Powell speaks today at the Jackson Hole Symposium. The expectation is that there will be some clarity as far as Fed goes, whether it will raise interest rates or not. What are your expectations? What are you picking up?
No, I think at least the broader expectation is that Fed is unlikely to cut interest rates in a hurry. I think Jeff Powell is very clear that unless inflation comes down to manageable levels of 2%, some further one or two interest rate hikes are definitely possible. And I think this is now getting more and more crystallized and getting clearer now as time goes. So my sense is that the markets are already factoring in at least a couple of interest rate hikes, and I think till that time, I think markets are going to remain volatile. They're going to remain a little patchy. Most importantly, globally, if inflation doesn't come down, I think that is also going to have a rub-off in India, because clearly I think markets are waiting for the interest rates to subside, to come down, because that would be a big booster for the corporate sector. So my sense is I think it's at least another 1 or 2 quarters away before we could see interest rates actually softening and inflation levels moderating.
So Avinash, will it make sense to maybe step away from equities at this point in time?
Yeah, I think the best time to invest in equities is when there is uncertainty. You must have heard the saying that the right price and the right news never comes at the same time. So you get good companies at good valuations only during difficult times. So I think when you want to build a portfolio, I think it's always better to look at companies from a longer term vision. Maybe the next 1 or 2 quarters could be challenging for the market. We have seen a very sharp rise from April onwards. But if you're looking at the next couple of years, I think my sense is that one should not lose an opportunity just for 1 or 2 quarters. We have been telling our clients that try to build in portfolios gradually, maybe not immediately, and adopt an SIP approach, but definitely don't ignore the equity markets completely.
Any particular theme or sector that looks interesting to you at this point in time?
Yeah, I think we have been very clear that domestic facing themes are going to do much better than the export oriented themes. We are not very positive on IT because we feel that headwinds would continue to challenge the sector. But I think domestic themes like capital goods, domestic themes like auto components, something like building products, these are themes which we feel should do well. Even cement, according to us, the second half of FY24 should be a lot better because with infrastructure investments built it up by the government, cement is the first building block. So I think cement is also one sector which is showing a decent amount of pricing power. So I think these would be the sectors where we would say that any correction in the market would be used as a good opportunity to accumulate good quality stocks.
Okay. Avinash, before we move to stock-specific action that Suyash has been tracking since morning and get your views on that, I want to quickly also understand from you, do you agree perhaps with various rating agencies as far as, the quarter-one growth is concerned? ICRA to SBI report pegging the quarter one growth at 8.3 to 8.5% and also predicting that this will substantially be lowered in the second quarter of this financial year. Do you think the second quarter is going to be perhaps a dampener, or you believe that second quarter, because you've been saying, and since I've been listening to you for the past 10 minutes, you've been very positive and optimistic about the ongoing quarter, the second quarter of this financial year. Are you still as optimistic, or do you think this is going to be perhaps a slight dampener as opposed to the growth that has been projected in the first quarter?
Yeah, I think even if the growth does moderate in the second quarter, let me tell you, it's going to be a base effect. So I think numbers prima facie are not going to be bad, but yes, the base effect, if it plays out, that could obviously impact the growth rate numbers. And my sense is that looking at last year, I think this year, hopefully, I think for the full financial year, that is for FY24, we have been seeing a lot of corporate activity. We have been talking to many companies. Our sense is that now corporate activity, especially on the capex side, has improved significantly. So I think you're going to see a lot of action on the corporate capex side. And to that extent, yes, the second quarter number, even if it is a slightly dampener, one would say that this is definitely a good consolidation kind of time. Markets have rallied from April, as I said earlier. So the markets would take a soft breather as of now. And today the problem in the markets is that not only quality blue chips, but even penny stocks have moved up significantly. So
Okay.
I think now is a time when you're going to be extremely selective on your stock specific strategy. I think only quality stocks and with good balance sheets, with good earnings growth numbers are going to be, obviously re-rating candidates. The other companies which have risen purely on sentiment and possibly on some news flow are unlikely to, sustain that momentum. So I think yes, broadly we are ready for a difficult second quarter, but I think that is also an opportunity in itself. So I think equity is a long-term asset class, and we have been telling our clients that you need to give time to the market. There are times when the market consolidates, it does not perform as per your expectation, but longer term, I think there's a lot of money to be made in the markets.
All right, a lot of money to be made in the market. Likely consolidation in the second quarter is what Avinash is predicting at this point in time. Let's also understand what other stocks are in action, Suyash, this morning. What should investors be looking at? What should they be tracking?
So Shweta, Coforge was another stock that we were tracking in this morning. Now the promoter entity has sold its entire 26.63% stake in the company for a consideration of about 7,600 crores through bulk deals, and the stake has been picked up by marquee names such as SBI Mutual Fund, Aditya Birla Mutual Fund and Kotak Mahindra Group. Another stock was the Adani group of stocks. Adani Enterprises, as we can see on the screen, was down marginally in the morning. However, the stock has recovered a little. Now, Adani Group, as per reports, is sitting on a cash balance of about 42,115 crores, which is the highest cash balance since the inception of the companies, and it was held by a series of strategic events. Now, the net debt to operating profit ratio also has fallen below the 3x levels, and this is the first time that it is below the 3x levels in a decade. Another big update coming from Adani Group is that the total equity deployed has surged to 55.77% of its total asset. It is a significant rise from about 40.16% that it stood at the end of financial year FY19. And the group has given a guidance that it expects that the equity deployment will touch about 2.36 lakh crore by the end of this financial year.
All right, those of course are big stocks in focus. Suyash, thanks very much for joining in with your inputs. Also, Avinash Gorakshakar, thanks very much, sir, for taking time out for joining us this morning with your inputs on that story.